Hi guys, today is October the 24th and we're looking at a chart of S&P 500. What's wrong with this chart? This thing was a drop yesterday below the 50-day line, and today we did not recover. We just came back meekly and hit that, and we barely recovered this. Let's look at it, a 15-minute chart here. This was the initial drop in the morning, and the market just struck along and dropped some more towards the close. 1407, horrible price action here. It wasn't as convincing, or even though the new home sales were came in here 6% higher than usual, but this thing never recovered here, and the market is looking now more and more towards uh, this 200-day moving average, which is sitting at 1375, and it just really looks like it wants to go there, which is not that difficult for it to do because it's not very far from here. It's only 15-20 points. Let's look at the other indexes here, which is NDX, which is your technology, and it's already sitting on that 200-day moving average, so that is already accomplished. The goal is accomplished. On Dow Jones DJI, and let's take a look at it where it has been. It hasn't reached that 12969 where this thing is, and that is about also not very far from it. The Dow is probably going to touch that one here too as well. So let it be if that is what the correction wants to be, and we're done with that. Once it reaches those milestones and it hits that and hits those averages and breaks them, then there's a reason for it to go back. But if it comes very close and reverses, usually what I've seen is that it'll go up higher and then drop harder and hit that. And so if it takes it out in the first shot, which is that's what it should do, then it's much more safer to play in the market. Most of the stocks are really damaged charts here. Tomorrow is earnings for this great stock Apple. You can take a look at it, what Apple has been doing. It's sitting there on this trend line. Let me go up close and show you on 15-minute chart what it looks like. This is the trading range on a 15-minute chart that Apple is caught in here. It starts with 1635 on the above and 611 on the bottom here, and it's just trucking along in there. It goes up and down and up and down, and the minute it goes up here they short it, the minute it goes here they buy it, and this saga just continued. Also looking at another chart here, which is PCLN, and also it's 15-minute on it. I will put that up, and this is also caught in a range here, consolidating here. Every time it goes up to 570 levels, 574, they'll short it, and then when it comes down here to this level, 559.60, it gets bought, and then it gets changed, and this thing is just going on since Thursday, when Google, which is this stock, and let's look at Google on a 15-minute chart, and you can see Google dropped here on Thursday, and it just carved out a very strange, very nice flat base, which is a stability and consolidation. So hopefully if this starts going back up, we may come back in the good graces. And this is the nasty plunge that it took. It took all the sickly market with it. The market was weak to begin with, and then this came in here. Now Apple has earnings tomorrow, so does Amazon, and this is the stock where Apple is. Let me go AMZN, one very close, and take a look at it, what Amazon is doing. Amazon is sitting here right in between 200-day and the 50-day moving average, and it will not hesitate to come down to 216, which is only 12 points, and it can easily do that in a couple of sessions. But let's see what the earnings do. That it does gaps on earnings quite a bit. You can see this gap here in May, and then it has gapped here some time back last year, which is 1031, and it just continues to gap all these things. There are a lot of plays which are people are trying to do that, but these charts are amazing. They're damaged. Alexen, which is a great company and a drug manufacturer, even though the numbers came right, it still hit that 200-day moving average. So most of these stocks are just taking it out and hitting that, and that is everything is sitting on now 200-day moving average, including the SPX, which we have noticed here is not. It is lagging behind. So the index, I think it may catch up here pretty soon with this 200-day moving average. 1408, 1375, not a big deal. It can do that in one session or two sessions at the most. So the market direction is very perilous at this time, and so conserving cash is the best option.